Trial balance. Definition. A trial balance is a report that lists all the total debit and credit balances of ledger. Account ensuring that both sides are equal. This is the basis of double-entry bookkeeping. System. Even if the credits and debits match, it is not a proof of accuracy, and there may be mistakes which will be discussed in this video. Types. There are 3 types of trial balance, such as an unadjusted trial balance. It is the basic accounting report listing the balances of all ledger accounts before making any adjusting entries. To ensure that the books are balanced, it must be checked that the total debit and credit entries match. It has 3 columns: the name of account, debit balances, and credit balances. B. An adjusted trial balance. The report lists all the debit and credit balances after making adjustments for accruals, deferrals, revenues, or expenses not accounted for in the unadjusted trial balance, verifying that the totals of credits and debits still match. This report serves as the basis for preparation of financial statements at year-end. C. Post-closing trial balance. After completion of closing entries, post-closing trial balance is prepared, which serves as the basis of financial statements. It is the starting trial balance for the next year. Trial balance. Definition. Uses of trial balance. 1. To find errors. The main function of a trial balance is to check for the accuracy of the internal ledger. If both sides, i.e. the totals of debit and credit, do not match, it is a sign of error which has to be sorted out and corrected. 2. Consolidation of data. All internal ledger accounts, credit and debit balances are summarized briefly for a particular period of time. 3. Helps in preparation of the financial statements. The trial balance serves the purpose of provision of data for preparation of profit and loss, balance sheet, and cash flow statements. 4. Incorporates the adjusting and closing entries. Trial balance helps in incorporating the adjusted or updated accounts, as well as the closing balances in separate accounts. 5. Double entry system ensures good control and reliability of books by matching total debits and credits. Errors in the trial balance. In the preparation of a trial balance, the following errors may occur. 1. The balance of account is mistakenly transferred, or incorrect amount is transferred to the trial balance. 2. The balance of an account is omitted in the trial balance. 3. The figures are transposed for E.G120 is written as 210. 4. If the entry is made on the wrong side for E.G, a debit entry for 200 rupees is written on the credit side, it causes the difference of double amount, that is 400. 5. Transcription errors. This means there is mistake in typing of figures for E.G400 is mentioned as 4,000. 6. Mentioning the transactions under the wrong account headings. 7. Offsetting errors are made when the debit and the credit amounts are mentioned at the same time. Limitations of a trial balance. As already mentioned, even if the totals of credit and debit balances agree or match, it is not a proof of accuracy, as there may be errors which will not be disclosed. Examples of such errors are given below. Entries completely omitted from the subsidiary books, i.e. journal or ledger, are not detected in the trial balance. In case of posting of wrong amount of entry on credit and debit side, trial balance will still match. In case of posting an entry in the wrong account but on the correct side, trial balance will agree. In case of the entries which offset the effect of each other. In case of error of principal and commission, correctness of the transactions and ledger entries are not guaranteed. It is not verified that all the transactions have been recorded. In case of compensating errors, where the errors cancel by themselves, the trial balance will still agree. How to locate errors. The following steps are to be taken for finding out the errors. Sum up the totals of the credit and debit columns of trial balance. If 1. Account for E.G sundry creditors is a total of different amounts, then add all such amount again. Check whether all the cash and bank balances and other account balances have been written in trial balance. 3. Check that the figures have not been transposed, no account balance has been omitted, and no amount has been written on wrong side of trial balance. 4. Check if there is any mistake in balancing of different accounts. 5. Check the totals of subsidiary books. 6. Comparison of fee figures of the trial balance of corresponding day to the previous year to be made if the difference amount is large in any account. 7. Nominal accounts, real accounts, and personal accounts should be checked if the difference is still not traced.